Sweep the highs, watch it fail, fade the trap. Dow trader, I just read the map. Two trees, flat by lunch, never miss the rail. Dow trader, liquidity's mine. Green on the day for your coffee's on time. Let's go.
Welcome to the weekend market update. If you've been paying attention throughout the week through videos getting released throughout the last week, you can see it in the titles about failed breakouts and red flags. Friday, all that came to a head and we closed out an incredibly red day for Friday. I think we had warnings throughout the week, one of them being when AVGO had earnings, came inside of expectations, sold off anyways, and then had a major gap down that failed to close. Then the Mag 7s broke down earlier in the week. Then we started seeing failed breakouts among all the big names. And then come Friday morning, non-farm payroll came in. And it came in better than expected. And what that does is that signals to the Fed that we can keep rates higher for longer. So obviously that becomes bad for the market. A good jobs report, bad for the market right now because it keeps rates higher for longer. So the dollar came up, rates went up, and the market fell down. Earlier in the week, Amazon double topped, then we caught a lower high below that. Then late in the day Friday, Meta announced they're exploring a massive equity raise to get billions of dollars to spend on super intelligence, and the market's been wary about all this capex money being spent. So and let's not also forget there's an incredible amount of people that have been positioned terribly in this market. We've been in a lockout rally, so they have incredibly, probably terrible positions really high, and that creates high emotions, and everybody wants to lock in their profits. They don't want to lose their money, so then the emotions get high, and it all comes tumbling down at once. And I think that's what we saw Friday. Despite all that, Google and Apple are maintaining relative strength through Friday. So I think those two are definitely worth paying attention to out of the Mag 7s. And from there, we'll just jump into the charts here. Coming up on SPY for next Friday, our expected move high and our expected move low from the market makers is a high of $757.25 and a low of around $718. So what can we imply from that? Well, I think it implies, if we flip over to the daily chart here, it implies that the options market believes we are, without a doubt, going to break the uptrend and get a lower low and perhaps an equal high. So maybe it also might imply that we're going to go into a bounce range. When I look at the daily chart on SPY, there is something that does stand out after Friday. And that's that, what if we do come to recover this? And well, when we get back to 748.75, 748.75 will now become a threat for a potential lower high to change the daily trend. So I think that's a level that needs to be respected greatly in the coming week. Also, you could see just from my drawing here, that would also make this a big head and shoulders pattern at the top here. So definitely a level that I would be respecting in the coming week for sure if we trade back to that level. I think the number one task this weekend needs to be determine that while we know Friday was absolutely a risk-off day, are we now moving into risk-off territory? And I think probably one of the best ways to do that is to go through the leaders, all the leaders that have been leading the market, and look at these charts and try and determine if they're broken or not. So let's start here with SanDisk. Is SanDisk broken? I would say absolutely not. I mean, the ideal higher low on SanDisk is 1588.35 or so. Traded just below that, but as you can see, it closed just above the 20 SMA. There is obviously some threats to the chart, but it's not broken yet. So when it comes to SanDisk, we do have a threat of like maybe coming down, and then we could get a lower high off this 1588.35. That is a threat. We also need to acknowledge that we did gap and go to the downside on Friday, and that's absolutely a bearish data point that needs to be carried forward. However, closing above the 20 looks pretty good on SanDisk. Let's flip over to MU. Is the MU chart broken? Well, my MU chart's certainly kind of messy and needs cleaned up, that's for sure. We closed that gap yesterday. We have 2 down days. Left a tiny bit of gap behind today. I don't think it's enough to really carry forward in the narrative there. Let me get rid of some of these lines, but I don't think MU is not yet broken. We're still above the 20 SMA on the daily chart. We're still above the previous major highs. I mean, the ideal higher low would have been right up here around 956. We are down significantly from the highs. I mean, 1076 down to 862. That's a significant move. However, relative to the gigantic move that's been made on this chart, it's not broken yet. Not at all. So it's still in an uptrend, without a doubt. The next key level down here, aside from the 20 SMA, is going to be right around this 820 level. So on MU, the next key thing is, can we get a look below and fail into this gap? Something like that. If so, that'll be great. And then I would look to rotate back up. There is a potential lower high threat right over here around 956.25, but I would deal with that when we get there. Let's look at some other leaders. For example, AMD. And I'm doing this, I haven't done it beforehand. That's why charts aren't quite up to date, etc. AMD did close below the 20 SMA, also closed slightly below this prior high right here, previous all-time high. So it's not broken, it's still in an uptrend. We're just gonna have to see how we interact. If we get down into this gap, do we do this? Like look below and fail on this level real quick? If so, super bullish. Or look into this gap and fail, or gap fill reversal. All those things continue the uptrend nicely. I would become concerned if we do get any lower highs below this gap, then I would start to have some concerns on that AMD chart. Let's see how like some of the smaller semiconductors, LRCX. I mean, obviously the ideal higher low would have been like, well, probably right around near today's high of day. The chart just below the 20 SMA. So I don't think that a lot of these charts aren't broken yet. I mean, the Mag 7s, most of those are broken for sure. But these semiconductor charts, I don't think are broken yet. So I don't think semiconductors, I wouldn't write them off yet. I wouldn't be so quick to write them off. Inbis did we did pick up buyers off the 20 SMA right here today. The ideal higher lows, like right in between this 221 and 233.50. So question becomes, can we get back above and continue this thing? So a lot of these leaders are, not looking too bad. Software had been things had been rotating into software. Software had been making recovery. Um, but now this is IGV, the software sector. We came up on this previous overhead supply, this previous head and shoulders before the breakdown, got into that level, and now we have a clear failed breakout into that. And we're back below the 200 SMA. And I think that's really concerning for software stocks. Um, Absolutely very concerning for them. I would definitely be curious to see how IGV reacts to this 9450 level, but the whole fact that we rejected the 200 SMA and rejected that overhead supply is certainly concerning. And when we get back up here, do we do something like this? So software, I think the software trade is under threat again. It certainly is starting to look that way. Not only that, for the week, software was negative 6%. And after today, tech is down 6%. Uh, we will see how tech reacts to this prior high pivot right here later on in next week. There's still some rotation going on. Financials were up 1.4% on the week, so not a ton of rotation. That's for sure. But there's some XLV 2.37%, energy 2.45%, you know, um, and industrials 0.6%. But XLC, SMH, XLY, XLK, IGV, all down substantially. So SMH chart, which has been obviously the most important sector as of late, semiconductors, is, sorry, just lost the zoom in a little here, is definitely under threat here. I keep losing good view of the chart here. It's certainly under threat. We're down below this prior pivot right here. Closed below it, closed below the 20. So now 578.85 could become a threat for a lower high, something like this. So even this could be a threat of a lower high if we made it back up there. So there's a definite threat in more downside as of right now. I think it's going to be fair in the coming week to be open-minded to both short and long trades, without a doubt, and be selective day to day. I'm probably going to have short and long trades planned out for each day. And then I'm going to be looking at how SPY and QQQ and whatever sector I am trading are moving that particular day, that particular moment. I'm going to be looking at the VIX, if it's high, if it's low. I'm going to be looking at breadth. Today's breadth was really, really bad. The Russell closed -5 to 1. The NASDAQ -4 to 1. Really bad. S&P not quite as bad, -2.5 to 1. So I'm going to really be paying attention to those market internals, to what's going on with the market, to what you're trading. Does it have relative weakness? Does it have relative strength? It's important, like long trades. First place I might want to look is going to be like Google, because Google moved up today while the rest of the market was basically flash crashing. So I know that's my hint from the market that Google has insane relative strength, right? Obviously, I don't want to be taking longs on Google while the market's selling off. But if the market is pushing back up and market internals are green, probably Google's going to be a good place to look for a long. If one presents itself, I'm not going to be forcing trades. I'm going to let trades come to me, but I'm going to long trades, going to be looking for those stocks with relative strength. Short trades, I'm going to be looking for stocks that relative weakness, right? So all that said in mind, going into the next week, I think when it comes to SPY, all I can say for it is I want to see what happens if and when we get back up near the 20 SMA, if and when we get back up near to 748.75. If we open up down here on Monday, I'm going to have a really hard time taking a short below the yesterday's low a day with all this massive thin structure ahead above me. I just don't see myself doing that. And the way it traded down, it really weakened the levels in between. So I need some retracement. I need to get back to a major level and see how it reacts. Does it create a lower high right there? Or is this just a mini flash crash and we just pop right back up and get a higher low above 748.75? If that does happen, that's going to be a major sign to me that this bull market's back on, right? So I need to see how it reacts right there before I attempt anything. I can't take shorts in the hole. So I need to build some structure out here. The other possibility, and I think it is a definite real possibility, is maybe we're going to chop around for a while after a sell-off like this. Fine. It doesn't have to be clean every day, you know? The thing that separates traders who are making it from traders that aren't making it is the self-control to not trade, not take trades when they're not being presented to you. They're not being given to you. We don't have to take trades every day. All right, I'll stop my spill and we will go through these charts. Okay, same story on QQQ as it is on SPY. If we get back up here, the threat is 722. It could present a lower high right there. So we've got to watch out for that level. If for some unlikely reason we recover the 20 SMA and get a higher low above this, that's a very telling sign that, maybe this was a quick flash and it's over with, just shaking the week out, right? So today's Friday's opening print, 7:30.15 will also be kind of a key level if we can recover that at some point. So the main key level here though is 722. I do believe the expected move I have listed on here is from the previous week, which we obviously closed well below. So we can get rid of that and add the current expected move. Current expected move on the Qs is like a high of 731 and a low of right around here, 679 or so. So that is absolutely implying a lower high and a lower low. And it really implies a head and shoulders pattern up at the top here. So that's what the options market's pricing in. It's kind of pricing in filling this gap down here. So I'm not going to short in the hole on Monday down at these lows after Friday. We're going to need to see some kind of pushback up here and a lower high before I would want to get short again. Just before market opened this morning, I posted on X on Facebook. If the IWM attempts to break out today, I wouldn't take that trade because of the jobs report this morning. And lucky for us, it never attempted to even try to break out of these highs up here. It just immediately broke down. Little inverted hammer candle right there. If I would have been watching the hourly, that would have been a great trade to the short side right there, despite the fact that the 20 SMA was right there. But regardless, we broke down below that. So now what do we look for next? Either push back up here and a lower high down, or up to here would be a little better. That would be the base case. I would think that this hourly downtrend kicks in as rates plan to stay higher for longer. If it did, like recover this 286.75 with a higher low, you could do a look below and fail right here. Um, I'm trying to think what would cause that. Maybe an end to the Iran war, maybe an inflation report that just beats expectations massively. I don't know. Something like that. As stated before, despite being red on the day, Apple does have relative strength compared to much of the other Mag 7. I would wonder what happens when we pull back to this 303.25. Can we get buyers to step it up and then come in and target the top of this range? And then once we get back up to 308.25, I think it's fair to be aware that this could step in as a threat back to the downside. So we'd want to see, does it reject that level, or do buyers step back in right there and we recover? Otherwise, the other base case here is just continue to flag out until eventually at some point gets the clean higher low above and continues. Okay, looking at the NVDA chart here, under serious threat of a major beatdown, we officially are in a daily downtrend on the NVIDIA chart. We now have a lower high and a lower low after Friday. So no doubt this chart's under threat going forward. I think that what I'll be watching out for is the possibility of rotating back to this 209.75, and that stepping in for a lower high back down to this 50 SMA. That's what I'd be watching out in the immediate term. If we do get back above 209.75, I'll probably just step aside and let it play out for a little bit because it's probably going to be chopping around in that case. Um, let's look to the left here a little. We're also below the previous all-time high over here. So I think this chart's under threat for sure. That's really the cleanest trade I could see is if we can get a lower high off of this 209.75. And Google, the relative strength winner here today. Here's what I'm waiting for. We got this inside bar today. So just a little higher low above. I'm just drawing really bad here. Higher low above Thursday's high of day. if we can stay above this 356.75 or whatever and get a higher low above 373.20, I would probably try to take that long up here into 381. As I've discussed on pretty much every video in the last week, 381 is a clear threat for a lower high on this chart. So if and when we get there, be on the lookout for a potential lower high back down right here. And also another requirement that I would have in mind for this trade is gonna have to be QQQ, XLK are gonna have to be green when this setup happens, and market internals are gonna have to be green. And I'm also gonna need to see that the volume on Google is higher than normal when that setup occurs in order to be taking that trade. Otherwise, in between these levels, just staying out the way. I don't want nothing to do with this right here. It's just junk. Stay out of it for sure. Also, on more of a micro level with this trade, the way it should play out, if it plays out a little higher low above 370.42, break Thursday high a day. We do have this minor threat right here that you got to watch out for at 374.91. Break above that, then make it up here. Then this is the lower high threat right here, 381. When that news came in on Meta today, I did something reckless and I got paid for it. But as soon as that news came in, as soon as we broke this gap, I went short and I did get paid for it, but it was reckless. It was absolutely reckless. Um, and the whole gap didn't close, and definitely saw like some serious people trying to hold up Meta. Like the whole fact that the whole gap didn't close, and I could see it as I was watching it, on a smaller time frame through the end of the day. There was some people in there throwing some money at Meta to try and keep it from closing this gap. Going forward, let me just check these levels right quick. Okay. So I think the obvious trade here on Meta, no pull back to this either 600 or 596.73 rejection, back down to equal lows, lower high above 583.15, fill the gap. I think that's the obvious trade. Been trying to catch like the gap fills on Meta, and they just like do not fill the whole way. It's just very volatile. So there appears to be people on both ends of the spectrum that feel like Meta should be going short or going long, and they're both willing to throw down on it. So I think it's very volatile. Really need to watch out on it. If we do get a higher low back above 599.80 or 600, it could rotate. I would only probably try to go here because of these SMAs. I'd probably try and target 612 with a higher low above that with, good supporting evidence and market internals at the time. think it's really important right now, any trades take to have supporting evidence with market internals at the time that the setup occurs in order to be taking the trade. Look at Robinhood real quick. We saw some support today off of 81. So can this continue to hold? And I think that's really critical for Robinhood that this continues to hold. Um, I really hope it does. I'm rooting for it, you know? Uh, if we could get a double bottom off of that and try and long it, maybe. What does Robinhood have going against it other than this like market-wide sell-off? Can anyone think of anything? It's really obvious. It is this. It's this atrocity of a chart right here. Like Bitcoin. Unbelievable. Bitcoin did barely break below this previous low right here today. Buyers jumped in right away. Um, I'm not going to do a Bitcoin analysis or anything, but it's just worth looking at. And the price of Bitcoin definitely has an effect on Robinhood. So if you're going to be trading Robinhood, you should know a thing or two about what's happening with Bitcoin. This Tesla chart is basically an atrocity. It is just so sloppy. But I will note we got this kind of like double top here. So can get a lower high off the double top neckline, 396.50. It might be a little lower. Well, with the previous highs there, I think I like 396.50. Oh, that's the question. Not sure if I'd take the trade because when you look at the daily chart over here, it is just a complete atrocity. I haven't updated the levels over here in quite some time, so other than that 396.50 level, I wouldn't pay much attention to the levels I got here. Oh, and 366 is also important on Tesla and 444. But other than that, I'm not too sure about my levels. Um, Amazon, let's take a look at that. Total breakdown, total failure, back closed below 247. Wow. Wow, wow, wow. Made it back up to the double top neckline today, closed below 247. Wow. Okay. Hmm. Well, with Amazon, my thoughts kind of go to this. If it'll consolidate here or something for a little while, do a little bear flag or something, and then break down below 247 with a lower high. I wouldn't want to do it like right off the rip. I definitely want to see consolidation before that happens and probably come down and fill this gap to 240.05. Microsoft, much like the IGV software, the chart is officially broken. Failed breakout, rejection of the 200 SMA, back inside of this junk. Not interested in this chart in between these levels at all. Looks absolutely terrible. Next step is, does it break down with a lower high below 412 again? Down to 401 or whatever. TSM, there's two ways I could see this chart going. One, we get back above 419.65 with a higher low. That becomes a look below and fail on the previous all-time high. Come in and target like 437 if that happened. Otherwise, any lower highs below this 420 level, like it comes back up and rejects it, I would think that we probably start the process of like rotating this bounce range again. So this 419.75, 420 levels, the key level on TSM, how does it react to that in the upcoming week is what the question becomes. I'm pretty interested in this Rocket Lab chart because it's broke down into this thin structure. So it's just a matter of if it gets a lower high, if we can catch it. Either could be on this level. I would try and short that down to 99.65. Even if it makes it all the way up to 122 and rejects that level, that could end up being a great short. I only lose my interest in this as a short possibility if it recovers this 122. So I'll be watching Rocket Lab for any lower highs. Because NBIS supported the 20 SMA so well, I'll be curious if we can get a higher low back above 233.50 to continue the uptrend on this thing. Here's a trade idea shared Friday. I was able to catch this one on Friday as well. I actually shared this Thursday night, possible gap fill on ServiceNow. So going in to next week, although I'm hesitant on it because of the breakdown in software, but depending on what's going on with IGV, things, etc., be watching out to see if we can get some type of gap fill reversal on this thing, at least make it back up to the top of this original gap. See how that goes. I'll end this video off with CrowdStrike. Really good looking chart here. Relative strength. It does have a gap down that was left open from Thursday. And we also need to be aware this is technically a three bar play on the bear side because we had this red bar close inside the previous bar to the lower end. However, when I flip to this hourly chart, I think this chart looks good. So question becomes, can we like look below this 675 level, fail, pop back up with a higher low above? If so, I would be targeting bottom of this gap first, then top of this gap. And if not, all the way back to all-time highs. I mean, this chart still looks really nice to the bull side. Below 675, maybe not, but if we can quickly recover this 675 level, get a higher low back above it, I think it looks great. sure to follow on X or Facebook or Discord or something. I'm sure I'll be posting more trade ideas later in the weekend.
Yeah. That's the setup, that's the play, that's the plan. Log the trade, close the app, wash my hands. No revenge, no chase, no holding the loss. Dow trader, disciplines the boss. You saw the level, you saw the sweep, now you know. Patience over prediction, that's the dog. Dow trader, smash that subscribe. I'll be back at the open, watch the next one ride.